guys, this is day 9 of trading the funded account. Obviously you've seen we have passed phase 1, we've passed phase 2 on this series, and I said if the series continues to do well, I will take this series from getting a funded account to getting a payout to investing and diversifying. So again, I want to thank you all for the support. Make sure to like, subscribe, and turn that notification bell, because I'll continue to bring that valuable content. I have a lot of good ideas that are going to come to this channel, that questions that you've been asking numerous occasions and no one's really given the answers. So yeah, today we took a GBP USD buy. This video is going to explain where I actually went wrong. We took a 0.5% loss on this idea that was a winning idea, and I'm going to explain things that I've realized and why I'm journaling, etc., to be able to correct these mistakes and I don't make them again, because it was a winning idea. So I'm going to get into this video. I'm going to explain exactly my thought process behind it, why I took this loss, and why I should have actually taken a profit on this idea. Again, as I said, especially when coming to the funded stage, if you guys are trading fundeds and you've passed your first funded account, you don't ideally go straight into risking 1%. You risk 0.5 or a little bit less risk, so that you're able to just bump the account. Let's get right into this video and then explain it to you. So first things first, always, as I say in every video, we need to identify flows, and clearly the flows in terms of GBP USD are bullish. I mean, we can see price rising to the top side here and starting to rotate higher. Okay, so if we drop down to the 5 and the 15 minutes, again, what are we looking for to get probability in our favor is our edgefill stats, right? And if we take a look at edgefill, right, on GBP USD, let's go to the Asian range breakouts, go to GBP USD, and you will see that the stats were heavily in our favor. I mean, we had a 76% green candle day, and obviously it broke below. It would be 68% green candle day. So we saw the crack. The first 15-minute did close above, so that's already good signs in terms of the trade idea that we're looking for. And then watching how price kind of just held the 50 equilibrium, again, another value area that we look for on a day-to-day basis, and then watching price once again surge to the top side and kind of holding this overnight high area. So there was quite a few, not we call it red flags, but just something always want to keep in mind of when looking at a trade. Essentially, we are looking for buys on this idea. So what we can see here is price is kind of like squeezing within this area. I mean, over here we got a high that kind of consolidated and pushed right back down after just cracking those overnight high, and then we saw once again pushing above but then rotating lower. So when I'm looking for my idea, I'm obviously just always keeping that in mind, and it's almost like price is squeezing, because one thing that's important to validate this idea is, one, obviously we're grabbing our demand area, right, which would be that point, and then the next thing is we have edgefill stats. So we ideally looking for an entry within this point, but we're not just going to take a trade because of these two little high areas kind of struggling to break past and struggling to break above, which is something that's important to identify. But what we can say is we're kind of holding the 5-minute EMA here, and another management EMA that we can keep a lookout for is the 15 EMA. As you can see, it's kind of rotating there too. So those are two things that I'm going to be keeping an eye out in this trade. And then there's an area that I made a mistake. So we were watching these two highs as price was surging on the 61 area. We got positioned on the 5 minutes as price started to push above the 5-minute EMA once again, obviously seeing that extension target to the 27. Ideally, our stop loss was at this entry level over here, okay, and we wanted to see price obviously rotate and see those continuations in the bullish market to that 27 mark, which would have left us to a 1 to 2. Remember, we were risking 0.5% on this idea, so the trade execution or hitting TP would have left us at about 1%, which, to be honest, is perfectly fine as well, or 1.5%, which I'm not upset about at all. I think that's exactly where I wanted to start off, especially coming into the funded stage, where I see a lot of traders, as soon as they pass their phase 1 or phase 2 and they get to this funded stage, they like rush the account and try and pressure, because now I can make money. I just need to make one single trade and I'll be able to get a payout. Essentially, I don't focus on that. I want to focus and keep my emotions in check by, keeping a good risk management plan and risk protocols in place, so that I'm able to stay consistent, so that I'm able to keep my mental state in check, because if you're risking 1% on your first idea, then you take another loss, let's say 1%, now you're 2% down on the pass funded. A lot of people mentally break at that point, and they either drop the account or don't even get to the payout stage. So I know for myself, just for my mental capacity, I want to risk 0.5% to make 1% or 1.5% ideally what I would be gunning for, right? So that would leave me at a 1.5% hitting TP. But where my mistake came in, okay, and in terms of management, I thought it was all right. I was pretty happy with it. But ideally what happened is we actually saw a surge down in price and tagged me out. Okay, it tagged me out because what I did is I actually managed my stops even a little bit tighter at that point, because I saw the surge start to happen to the downside. I thought price was failing to hold above, but then obviously with the next 15-minute candle 12:30, we started to see it pump off that 15-minute candle once again. What I could have done better in this trade idea was simply actually just using the 15-minute EMA as my management tool, because that's essentially what I was focusing on in the first point, as I mentioned earlier in this video. I wanted to use 15-minute EMA as my management point, and then the 5-minute EMA as my entry level. So I think the entry was perfectly executed. Maybe I could have waited a little bit longer just to see what this next 10-minute would do, as we obviously entered at 12:15. We did know that there was a bit of a surge going down. I was a bit hasty on the entry, I would say. I was happy where I entered, but maybe I could have been a bit more patient, because the 12:15 opened. I would have expected maybe a little bit of a pullback first and then get positioned, because I mean, if we waited a little bit, I would have possibly gotten positioned at that 71 area strongly, and then having my stops just below that point, which still left me to the 15-minute EMA hold, right, the management style. And then we can see obviously with our risk to reward, it would have switched from 1 to 2 to 1 to 3, and that would have been a 2% gainer on this trade idea, which would have been really, really good. So watching how price obviously surged, it definitely was a hit, and it was a lesson, as again everything is a lesson. I mean, from again, an idea that should have made me money, but because of my aggressive management style and maybe a bit hasty on the entry, as obviously I was watching price quite long here, I didn't enter. I was being patient up until the last second when I wasn't patient and I was too quick on the management style. We unfortunately did take a 0.5% loss on this idea when it should have been a winner. And actually, just to show you exactly where price did surge, I mean, that 61 mark, and then you see the extension target on a fib, which would be 200%, to watch how price surged even after pulling back a little bit, holding, we saw a bit of news come in there and almost hit that 21 mark. So if we entered at that point, at the 27, and with our stops below that level and even holding through news, it would have been a beautiful 1 to 6 to risk or reward, which again, I mean, I've shown you time and time again that the strategy does work. I have stats, I have data behind what I'm doing. It's not just out of a hiccup trade that I'm taking here. It clearly has structures and systems in place that I'm looking for every single day in the market, and it's proven to work, and not every day it works. Obviously this trade I did worked, but my management style was a bit too aggressive. So hope you learned something in this idea. If you guys want to join my team and learn how to manage the style, learn the strategy and actually become consistent in your game, and not only that, I mean, learning how to manage a trade correctly, learning how to have the proper risk protocols in place to stay ahead of the markets. These things are very, very important. I'm going to leave a link in this video for the Calendly link to book a call with me to see if you qualify to join our team. And then what I'll do as well is I'll leave the broker that I usually use. And then we are not yet recommending the pop firm that I'm utilizing in this challenge as of yet, until we get a payout, and then we'll release it. So I hope you guys are keen for that. So again, thank you for the support. Make sure you like, subscribe, and turn the notification bell. We will keep on bringing this valuable content. I got some exciting videos planned, and I am busy in the process of recording it and editing it and posting it out to you guys. Hope you enjoy. Peace out.